Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about the importance of yesterday's Fed rate pause, the crypto conference we attended yesterday, and what Chicago Clearing will do for Ankerstar Wealth's clients. Before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The Fed paused their rate hikes yesterday after 10 straight hikes. What will the Fed do next?
Hey, well, good morning, Allison. Good morning, everybody. We were off air for a couple days to go off to a conference. We'll hear more about that later. But yeah, so been an exciting week. If you flash back to Monday, we talked on Monday's show about what's going to happen. Our prediction was 4% on inflation Tuesday morning. Check. Nailed that exactly. 4.1 was the expectation. It was actually 4. And then, of course, we expected that the Fed would pause their rate hikes yesterday afternoon, in which they did as well. Now, if you were staring at the market, during that time, good for you / get a life, right? Unless you're in the financial professional, financial industry. But certainly, as soon as they paused and we got the new statement, if you haven't seen the statement, it's only like 2 paragraphs long. And they changed very little other than the fact that they're going to pause and assess later. So the statement was brilliant and exactly what we expected. If you watch the market, it sold off hard, and then it came all the way back pretty much by the end of the day. And the reason for that was the press conference was, I thought, one of the, honestly, well, I'm going to say worst that he's done, but, caveating that with Jerome Powell does a really good job normally of sticking to his talking point. And yesterday he was kind of all over the map, which is uncharacteristic for him. So we kind of, everybody like, okay, we paused. And then, of course, all the questions during the conference is what's going to happen now? Are you going to raise later? Are you going to lower rates later in the year? Are we going to have a recession? Is it going to be horrible? Is it going to not be so bad? And there was a lot of different answers that came out. So, kind of your media training 101, which some of us got a lot of that in the military, depending on your position. But, you kind of have 3 talking points. And it doesn't matter what the question is. You pick the closest talking point, and that's what you say. So he's done a good job for all of 2022 and the beginning of 2023 of no matter what the question is, well, our decisions going forward will be data dependent. And it'll be data dependent on, inflation numbers and how the economy's doing. And, we'll take a look then and make a decision. Well, a lot of people are like, well, that's not a very satisfying answer. But if you go into a press conference and they ask 3 different questions and that's your answer to all of them, well, good news, right? That brings the press conference to a close pretty quick, right? Because you're not really saying much. But the other side of that is if you don't do that, you're going to be all over the map. And that's what we heard yesterday. We heard that we're going to raise more rates in the future, that this won't be enough. And it's like, well, I don't know about that. And then they said, we're not even going to think about lowering rates for like a year, maybe 2. And it's just like, how would they know that without a crystal ball, right? So it was almost like he was shooting from his hip. Like, there was like his PR person was just off screen, kind of rolling their eyes going, okay, let's just stop, stop talking. Right. That's how the market reacted yesterday. This morning, we got up after you have all yesterday to digest that. The markets were down big, almost 1%, 0.5%, pre-market, and then now look at them, they're 0.5% across the board as people go back to the word. So is it what the Fed did? They paused. Or is it what Chairman Powell said, which was all over the map and a little bit contradictory during the press conference, which was confusing, right? I think it's, what do we need to hang our hat on is what they did. They paused. That's a fact. We said we had predicted that they were going to pause during this quarter. They did. My prediction stands that they will not raise rates again, this year or next, to be honest. The next move will be lower. That's my prediction, one person, but that's how we're going to invest. And when that pause does come, the market has a huge upside from here. So that's what I'm expecting is a move higher. Where could I be wrong? Well, the impact of the inflation could turn around and go back up. I don't see that happening, but it could certainly. The economy could crash. I don't really see that happening with full employment like we have, but it could. Right, so you have to be prepared for the bad, but I certainly think this is going to set a baseline on an already good year of 23 across the board and make it even better going down the road. But it'll be anybody talks about going into the July meeting, so we'll stay tuned for all the hyperbole that goes into the next one.
Next, the three of us attended the Digital Asset and Crypto Conference earlier this week. What were your takeaways?
All right, I can, when I could already see the eye rolling going on in the crowd, that's listening to this or watching this of, oh boy, so Ankerstar Wealth's going to put me into crypto. No, that's not the case. But as part of my fiduciary responsibility personally, and then part of the team to better serve you, is we can't just blow this off. Currently, we're not really invested in crypto directly. We can't do that for you as a firm because there's not a mechanism to do that. So even if you wanted to, I still have to say, yep, I'll advise you, but you have to go off, get your own coin wallet, buy it elsewhere, right, and store it and worry about taxes and all that on your own because we can't really bring it in-house. There are a few ETFs out there that that are like proxy investments, like Bitcoin has GBTC, which is, and I'm not endorsing it, I'm just saying it's out there, a Grayscale Trust. We were in that for a while. It follows along. MicroStrategy is a company that is loaded up their balance sheet with Bitcoin, so that kind of follows along to the price. Ethereum has a trust as well, but they're not pure plays. They're not outright owning the coins. So not trying to tell you whether you should or not, but there's a lot of issues in the space, and that's what these conferences, they have one every year. It's digital assets too, so it's not just crypto, it's NFTs and other stuff that, after 2 days, I can't say I understand it. I know more than I did, so that's good. But my angle is knowing enough to kind of advise whether it would be right for you, and if it is right for you because you want the risk, how much to put in your portfolio, and what mechanisms do we have to own it, that sort of thing. So who hosts this conference? I would say, here were your three keynotes, your conference chair and your two keynotes. But it was really, cutting edge stuff. It was Rick Edelman, who's kind of a champion of crypto and digital assets, again, from the financial world, pivoted into this. And then also you have the SEC enforcement chair of the division, and then you also have a congressman that is on the Financial Services Committee. So you have heavy hitters, and it was a privilege, of course, to sit there and just listen to them talk back and forth. But it got pretty tense between. They were being polite, but it was still plenty direct, like the congressional hearings you watch. Of the Rick asking Mr. Hirsch, it's like, well, if you won't say it's a security, which they refuse to do, then why is the Security Exchange Commission have oversight on it? Right? If it's not one, then why are you legislating it? And there's all kinds of different angles we won't go into, but really a privilege to sit there and learn more. If you're interested in crypto, there is a place in your portfolio if you're interested in. Just like other things I wouldn't personally invest in, like fine art or bourbon collections or motorcycles or vintage, classic car. I don't know. It's its own thing for sure. And anytime you have its own thing out there, you have manage it to where if you have $1 million net worth, up to 5%, right? And that's where we can help you. And then we can kind of point you in the right direction to where you can invest. Now, what's coming is potentially, eventually, they've been pushing for it for years, is a crypto ETF. You can get some kind of one-off ETFs like BITO. Bitwise has an ETF, and it's the miners, and it's the infrastructure, right? Or CRPT is another one that we looked into for a bit ago and held for some folks. But it's not the crypto itself. But what's coming is a custodian out there, Fidelity, is in July, so like literally right now, trying to release a way to own your crypto through your custodian. Schwab has said hard no. It's like not going to happen here. Fidelity, of course, they're merging with TDA, so they have plenty on their plate for right now. Fidelity's going to give it a shot. So I'll probably sign up myself or one of the folks in the office will, buy a crypto of something and kind of see how it works. Right, make sure it does work first of all, because just because somebody says it works doesn't mean it will. Make sure it does work, and then if so, then if what it will save you is, like right now, if you buy in a coin wallet, you got to remember 128 character. We can't remember the 10 characters of our own passwords all the time, let alone to have this big crypto password and then not be able to write it down. And if you pass away and you lose the password, then nobody can get to your crypto. Well, having it with a custodian changes the game, right? You don't need to remember your password. They do. If you pass away, there's already a beneficiary on file. They can contact them, transfer it to them. So it overcomes a lot of the problems that are out there. But one of the more interesting things that I'll close with is that the crypto chief there did happen to make a comment about he's like, well, the reason we haven't moved on this stuff is it's still relatively new, and I get that people still think it's new. Bitcoin's going on its 20th birthday or something. I mean, it's kind of not new. So for them to be able to say it's new, it's like, well, it's kind of not. It's been around. I don't think Bitcoin's going anywhere. Obviously, there's regulation issues, there's taxation issues. The last piece was on taxation, which I thought was kind of fascinating, even though it was brutal to be that late in the afternoon of the closing piece. But it was interesting. If you look at money, which it is a version of money, right? And if money goes from my bank account into another bank account with my name on it, well, that's just a transfer. But if it goes in from my bank account to somebody else's bank account, one of two things has happened. And I was like, oh, I'm listening. What are they talking about? They're like, well, it's either a gift or a purchase. And I was like, that's kind of interesting. And each of which have tax implications. So, folks that are out there transacting in crypto, good luck on the taxation piece of that. And I don't know, it's kind of a little bit of a nightmare. And of course, the IRS is challenged right now anyway with just regular taxes, let alone trying to get their brain around this. So a lot more to come. It's in Austin again next year. I do plan on attending next year. We have some younger advisors on the team. We want those two advisors to be fluent in this. Not fluent, that might be a little much. At least somewhat working knowledge of this to be able to help some of the folks that really want to get into this as one of their main forms of investing. So that's why we went. Again, we'll go again next year, and we're always trying to get smarter things.
Last, Ankerstar Wealth recently signed on with Chicago Clearing for class action suit resolution. What does this mean for clients?
All right, so most boring presentation ever. We've talked about the Fed. We've talked about crypto and taxes. Now we're going to talk about legal. It's just like, oh my goodness. So I'll try to make it quick, even though it's not necessarily the quickest topic in the world. But when you invest, and we do mostly mainstream investing, we don't take a lot of risk in the portfolios, meaning stocks below $5, questionable companies. We try to screen those out, right, and stay best of breed. But however, every now and then we'll take some risk on what, it's either a no-brainer in my opinion or the investment team's opinion. Luckin Coffee was one of those. Depending on where you hopped onto the Luckin chain, it went from like $5 to $50 down to below $2 and then back up. And their books were cooked, which is bad, right? And of course, you don't know that till after you're invested in it. So anyhow, you either made a lot of money or lost a lot of money along the way. But at the end of it, there was a big class action suit. So quick refresher on class action suits. Those are the postcards you get in the mail saying, hey, if you owned, if you use this product, or if you own, in the investing worlds, if you own these shares during this period and this period, fill out this paperwork. Well, we did that for you, and I say we. It was Jaden did a lot of work filling out all of those papers, 2-3 years ago, whenever it was, for Luckin Coffee. But it was very time consuming, and then we had to explain it to the client, and then you guys technically had to DocuSign it, and I think you had to submit it. I don't think we could. Maybe we could submit it on your behalf. Anyhow, it was kind of a time drain, if you will, to be able to get a check for $30 in the mail, right? So I know a lot of folks just throw those away when they get them because you never get the big payment for all the time you put into it. Well, what Chicago Clearing does is exactly that for investment firms. Is we give them our access to our data feed so they can see who's held what over what time, and it's privacy protected, but they have access to it, and they know who owned Luckin from when to when, and if a class action suit comes up, they'll be able to put that paperwork for you, and you get a check in the mail. Now they take 15% for doing that, so just like any other legal firm, they get a percentage off the top, but they worry about all the paperwork. We get notified that, hey, pick a company. I'll just say Apple. It's my favorite company. I'm not making a prediction that their books are cooked. Goodness. But just, picking that company, if there's something, if there's a class action suit that goes out, the Vision Pro headset gives mega migraines next year or whatever. And, it goes through this process. Everything will be done for you. You just get a little bit less of the money. So I think it is a no-brainer across the board. That's why we at the firm decided to sign up for their service. So where's this come out to you as a client? You're going to get an email later today or maybe before you're even watching this, kind of explaining you do have the option to opt out. So if you sit down and read these things when you get them in the mail, it says you can opt out of the class action suit and pursue your own legal action separately, like go hire a lawyer. And there's probably somebody out there that does that. But same thing with this service. If you're like, you know what, I just don't like what you're saying, Steve. I don't, nope, I'm out. I want to reserve the right to sue the company on my own. You certainly can. You simply sign and return the form. That again, Candace will send that out to all clients later today. But that's kind of a quick overview on how that works. Again, it's a service that's going to help identify these things that are out there and recoup some money kind of automatically for us. So again, very happy to have them on board and as part of the services we offer you.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.